Hello guys and welcome to myfinanceteacher.org. I want to give you a really quick update on gold, stocks and crude oil. So talking about gold, I think gold might be starting its declining phase into the shorter term, daily cycle, rather than the longer or intermediate cycle. I see daily cycles on the gold chart as follows, something like this, all the way from the beginning of May until the beginning of July. That gives us the first daily cycle in the ongoing intermediate cycle in gold. And we've possibly started the declining phase of the second short-term daily cycle. They usually last for a couple of months, sometimes shorter, sometimes longer than that. The previous one lasted for just around a couple of months. The current one has been going on for around 49 days. So we still have maybe a week into the decline in this current daily cycle. How far will the decline take us? One target is these lows that we saw all the way through June and July. That would be somewhere around 1440, 1450. That's also where this 20-day moving average is at the moment. The 20-day moving average is at 1453. And for example, a 62% retracement of the rally within the current short-term daily cycle would also take us somewhere to about 1440. Looking at other indicators, RSI, this is only 10-day RSI, has been overbought for a few days. So that also might indicate some cool down is necessary. And lastly, looking at the very long term, this price level that we've reached a few days ago of about 1530 is, I think, an important resistance zone. It has been significant over here all the way in late 2011 and early 2012. So a noticeable resistance zone around here, that's around 1530. So short term, I want to be cautious on gold. We might be going into a daily cycle declining phase. I still think there is a chance that gold might continue the trend upwards for a while. And the reason for that is because the current intermediate cycle has only been going on for around 15 weeks. And these cycles usually last for about half a year. So we still have enough time within this cycle to continue the trend upwards before the declining phase of the intermediate cycle starts. So maybe a short-term pullback towards 1440 over the next 1 or 2 weeks. And the third daily cycle, whether the third daily cycle is going to break above the resistance zone or not, that's under question. And after that cycle tops, we might enter the declining phase within the intermediate cycle. So that's my expectation for gold. Talking about the personal positions in GDX, as I mentioned in a previous video on GDX, we had an entry over here at about 28.6 with some 4% downside, 12% upside if GDX was to reach the 2016 high that was at about $32. Unfortunately, GDX didn't do that, and we're now back to roughly where we entered. I did exit the positions a couple of days ago with tiny negligible profit, basically at about break even. But you know what? I didn't sell the SLV, my silver positions. Although maybe I should have sold the silver as well. In the current intermediate cycle, silver has underperformed gold. The underperformance is not really huge. At the moment, gold is about 17% up within this intermediate cycle, and silver is around 13% up. Plus, there is a lot of volatility on silver over the last couple of days, so maybe the smart thing to do is to sell at the moment to avoid taking too much risk, but often silver outperforms when gold is really moving upwards. And I think there is a chance that silver might shoot up anytime soon, catching up and overtaking the performance we've seen from gold. Let's have a very quick look at the US stock market. It might be that we have entered the declining phase of this intermediate cycle in US stock market in late June. Since early August, we see a nice bounce up, but usually these declining phases of the intermediate cycle take 3 steps, creating a low. We've talked about this in some of the previous videos. So I'm cautious on stocks as well at the moment. There is a lot of volatility. I think the Fed might be trying to prop the stock markets up. They might succeed and the stock markets might actually go up over the next few months. But I think there is a bit of a risk at the moment that we might at least retest the June lows. So a bit of a caution here. Because I'm not sure if the stock market is about to drop again, for the same reason I'm a little bit cautious with crude oil as well. In my previous video on crude oil, we were taking a stab at this low-risk trade somewhere in early July. Since then, there were a few green days on crude oil after that. We did have a slightly higher high. If you did bring your stops up, good for you. In either case, sorry I haven't covered crude oil for a while, but I've been, of course, out of this trade for a while as well with a break even. It would have been nice to catch this jump from 51 to 56, but the first daily cycle in the current intermediate cycle, that was the previous intermediate cycle in crude oil since December until June, and the new daily cycle in crude oil has retraced 100% of all of the gains. That makes me uncertain whether the second daily cycle is going to give us a higher high or whether the, unfortunately, current intermediate cycle has already topped in mid-July and we are going to see a lower low instead on crude oil. So if crude oil drops below the recent lows, that's at about $51 or $50.8, then the whole intermediate cycle is in trouble. And since it only started a couple of months ago, it still has a lot of time to continue. We might be in a bit of a downtrend in crude oil over the intermediate term. But on the other hand, if crude oil breaks above the recent highs, that's at about $60.8, then maybe this intermediate cycle is still going to recover. So although I'm uncertain on crude oil itself at the moment, I think some of the oil producers might be a good buy because even the recent low at $51 is much higher compared to where oil was in December, that was at about $40. Whereas if you look at some of the largest oil producers, let's say BP, its stock price is down to where it was in December 2018. So while crude oil is now at about 36% higher, a lot of these largest oil companies are underperforming, so they might try to catch up over the next few months. Same with Royal Dutch Shell, it's basically back to the price level where it was in December 2018. Plus, a lot of these oil companies pay a really nice dividend currently at about between 6 and 7% dividend, which is, well, compared to the yields now on the market, is pretty good. But you need to know what you're looking for. For example, not all of the major producers are undervalued compared to the crude oil price itself. ExxonMobil, for example, tracks crude oil price itself a little bit better. There is no underperformance. And just like crude oil, Exxon is actually higher compared to its price in December 2018. So that's it for this quick run. A lot of information here. Gold, stock market, and crude oil. Make sure you hit that like button in return for all of the value I try to provide to you guys in these videos. Remember, this is an opinion, this is not an investment advice, and I would be really interested in your opinion as well. We all might be learning a lot from each other. So leave your thoughts on the markets in the comments below, and good luck in your trades.